Recording in progress. Hello and good morning, listeners. Welcome back to Almus Market Mornings with Jayaram Krishnamurthy, your morning brew of financial market updates. Now, listeners, for a while we've been hearing discussions around liquidity in the Indian system, and the Indian Central Bank looks to be keen on addressing the issue even further with another OMO announced yesterday amounting INR 1.25 lakh crores. This definitely brings into consideration, with such substantial liquidity move, what is in store for the rate front by the RBI. Even with questions on geopolitical tensions looming, FIIs didn't take a backseat, investing in the Indian markets for 9 straight days, making the overall close for the month positive after a relatively negative start. On the global end, Trump's administration is likely to reduce the impact of his automotive tariffs on Tuesday by elevating some duties imposed. So, JK, what do you see of such updates? What is your take?
Hi, good morning, Shikhar. What is striking for me in the last couple of sessions has been the total outperformance of the Indian market, including the Indian rupee versus its Asian peers. If you look at it, stock market in India is up 12% and rupee over 2% from their respective lows, which was seen just before the 90-day pause that Trump announced. No, the outperformance is, driven by a huge interest revival from foreign investors in Indian stocks and somewhat pushing other issues to the background. I would actually say the outperformance is not just against the peers, it's also against the popular perception of, concerns on the border situation, and that would have normally made players cautious and be defensive on the stocks as well as on the rupee, but that is not to be. So rupee has actually tested below 85 once again yesterday. This is the third time that we are testing it in the last last over a month. And thanks to, of course, renewed bids from central bank, we have bounced above that. But what is perhaps driving the foreign investors is the recent indications of growth picture of the economy, and as well as the corporate numbers that have been encouraging for for their renewed interest. They have pumped in over 4 billion in this period of 15 days. And the net flow for the month of April now stands marginally positive after being deeply in the negative in the wake of reciprocal tariffs announced by the US administration. Surprisingly, interests of FIs have not been dented, as I said, by the global geopolitical tensions. On the other hand, they are probably encouraged by the US Treasury Secretary President stating in his recent interview that India could be one of the first trade deals that we would sign. So right now, market is looking only at the positives of the Indian market and the economy, and that's leading to stocks as well as the rupee outperforming. Meanwhile, US markets have also been actually recovering significantly. A 17% rally in S&P 500 from the lows seen on 7th April, 40 BP fall in the long bond yield, that is 10-year and 30-year. And this actually indicates investors have been buying back US assets despite the widely held sell America stance. And this has happened as assets reach unreasonably low levels, and officials have done some damage control and now keeping the positive expectations in the trade talks as well. Now, the president moved to reduce impact of his automotive tariffs yesterday. Some of them elevating some duties on the foreign parts in domestically manufactured cars, and keeping tariffs on cars made abroad have also given some relief to the market. Today, we have seen even the Chinese, while they have been denying that they are into negotiations or in talks with the US, they've also taken a step back in the official fixing of the Yuan to the weaker side. And that has also led to some selling in the USD against the Yuan. So overall, we have seen some more weakness coming to the dollar. And of course, Euro and Yen have gained by default. Gold also rallied yesterday from, after testing the 3250 levels repeatedly and failing to break below that. But going forward, I think if the good news or the recovery in the US markets continue, I think the recovery should be more in the underperformers like the Chinese Yuan and possibly the profit taking could emerge in other currencies like euro or even gold some more as the safe haven trades are unbound. So that could be one possible development that we are seeing. In the meantime, we have a lot to look forward to from policy perspective as well. Now, FOMC meeting is on 7th of May. That's next Wednesday. Before that, we have Q1 GDP projection today. It is shown at 0.4% versus the 2.4% previous quarter. PC inflation tomorrow is down both in headline and core. Non-farm payroll is expected to be lower by over a lakh compared to March. These combined with Fed's own statement that tariffs related to inflation will be transitory add to a possibility that Fed might take somewhat a dovish stance compared to its previous statements, and perhaps this may not be seen as yielding to pressure from the government because this is based on hard data, and Fed has been seen to be independent all along so far, and that credibility being maintained will be under boost to the dollar and also the dollar assets, at least for now. Of course, we let us not forget that none of these is going to address the core issue of the large deficit and the debt that the US is carrying. If the tariffs are going to be reduced substantially, how will the trade deficit be addressed, and how will the fiscal deficit be addressed? How they will also, maintain rollover of the huge debt that they are, without increasing the fiscal deficit. These questions do remain, and these basic issues will, of course, keep the dollar on the weaker side. But I think right now the recoveries and possible dovish stance, in my view, from the Fed will help the asset markets in the US to recover more. And across the Atlantic, we also have the from policy perspective, Europe is also facing a lot of data, inflation numbers from Spain, France, and Germany, economic sentiment, the German retail sales and unemployment, and the GDP data, along with the Eurozone GDP data. All these, are ahead. Even as some views are emerging that Europe will be cutting rates more now that the euro is quite strong. They are emboldened to ease and help the growth even further. So that could also put a cap on the single currencies gain in the coming sessions. However, so far that is not visible, but it does look like unless we break the previous high at 1.1575, euro is expected to correct lower, which the stand that I have been maintaining. Apart from the economy, the Mag 7, some of them like Amazon, Meta, and even Microsoft, they are expected to announce the results today, and that will be quite interesting to hear some of the CEOs talk about how they are planning to navigate the potential trade war in the coming days. Of course, Bank of Japan meets ahead of the Fed. They are meeting on Thursday. No policy change is expected. All the market will be focused on the outlook and how the policymakers are planning to navigate the uncertain economic development. Interesting will be the statement on the currency, if at all, because there are talks that US wants yen to be stronger. That's one of the talking points in their trade discussions, and so that is something that we will look forward to in their statements post the policy decision. So all in all, a rush of events and numbers to look forward to. India perhaps continuing to outperform for some more time unless we hear some really deeply concerning news across the border. I think investors seem to be a bit relaxed on the Indian market. So this state could continue for some more time. Thank you.
JK, that was really good. And just to quickly summarize, yes, folks, there's a whole host of events coming up, starting off with BOJ on this Thursday, where no change in policy is expected, but markets would be keen on watching out what's the outlook for the economy and the currency activity. On the US front, yes, the hard numbers does suggest that there can be a change in stance towards dovish, but it needs to be seen how the economic updates further influence the Fed members. And even though, yes, we can expect some sort of change in stance, but the debt concerns do remain, which will continue to keep the dollar strength in check. On the Indian market front, yes, we've seen the outperformance of the Indian markets, primarily on the backdrop of change in the interest by the FIIs, and the recent indications in the growth picture, as well as the positive earnings, relatively positive earnings, are also one of the reasons for the FIIs to be really positive on the Indian markets. So that's about it, folks. So we shall come back again tomorrow with another round of updates. Thank you so much for listening in.